Welcome, everybody, to this month's Grid Meetup. We are here to discuss the BRRRR strategy, right? AKA how to buy and hold. Very excited to have everybody in this room. This is a really, really cool experience to see some longtime members, a lot of new faces here as well. So I just want to reach out just first off and just say thank you so much for everybody for coming here. This is a really cool thing.
Yeah, thank you so much. Let's go to the next one, man.
Sure. What is Grid?
Yes, so we're really excited to have you here, right? Because the whole point of this community, the whole point of our business is in creating community and creating platforms. So if you haven't been to one of our Pints for Purpose events, come on out. We all get together. We throw back and we give back. Tom in the back is our chairman. You can get some information about Pints for Purpose, right? And here what we've done is create a community of investors, right? Because the biggest challenge is how do you create trust? Well, you got to create environments where people are being open, right? We're being honest, we're being vulnerable, and we can cross-check each other. Like there's a lot of people in this room that I know very well that have worked with other people. There's a lot of people I really trust here. And what I found is when I get traveling around the country and I get in those environments, it's like, oh, me and Henry can be amazing friends because we both already trust Cory. So there's like that trust transfer. So that's the point of Grid, right? Is to teach everyone the most important part of this business is not the book part. We can go way deeper on this other thing. It's the how do you get belly to belly, how do you build relationships, right? And then how do you go out and run those plays? And we've created a community of people who will help you run those plays. My proudest moment, our last meeting, someone was new and I said, hey, who would go look at this deal with Jesse? And half the room raised their hand. That's the kind of place we're here. So if you're here, if you're new, welcome, come talk to us. We want to be in a relationship with you. We're here as a resource. If you're another agent, we're excited you're here. How many agents do we have in the room? I love this, right? Yes. So if you know us, right, we want to be the nicest, the most well-liked agents in the market. It's our secret strategy, right? We want people to want to work with us when they see our name. So we're here to help you win. Hit us up. We'll help you look at deals. We'll send you our vendors. Anything we can do to help you guys, right? We love real estate agents. We are agents. This is an agent investor-led community.
This is it, man.
What are we not, Cory? Because that's the most important part.
Ultimately, right, we are not gurus. We are active investors in this space. We're just real people doing real deals in real time, and we're all here to just share our knowledge and experiences, wins, losses, challenges, everything that kind of comes in between, because certainly we can all celebrate and high five on some wins. I'm also, open enough to also talk about like some challenges as well, because I fully believe that we all can learn from some other challenges and, don't do that, go do this instead, right? So we really try to create this space where we can all be here just to share, learn and grow together. I'm super stoked about that. Really just that, our mission is just that, to connect and collaborate with like-minded people, building wealth and creating impact through real estate. I mean, that's really just the mission statement for this in a nutshell, right?
So if you're here and you're new, you're in the right place, right? We're all new once. Please ask questions. Those are my favorite questions. My favorite questions are the new questions, right? Of like, what is underwater?
Yeah,
underwater,
they're literally underwater?
We were talking about underwater homes earlier. This has made my day. I love it, right? We're all brand new. And we're going to take you on that journey, right? The life cycle of an agent investor. This group was started 14 years ago. So plug in. There's a YouTube channel. Grid is 25,000 people in 40 cities. Really, I think, has the most amazing content. And what they do really, really well, I think, is break everything down at a USA Today level, right? So even if you know something, I borrowed these frameworks where I was like, fantastic, now I can explain wholesaling in 30 seconds when I'm talking to someone else, right? Hey, cool, we all have a common language for understanding like an owner financing deal when I'm trying to pitch this to someone else or subject to. Keeping it very, very basic. Mm-hmm. Yep. Cool.
Love it, man. Love it.
Cory, if I can, I'm going to introduce my guy. So Cory, I think, is the avatar, right? I am here. I started at 23. My name is Justin Myers. I run Casa Knoxville, and I started at 23 as a mortgage broker. So if you have any questions on what not to do in 17 years in real estate, come talk to me. I've had every job you could have. I've made probably every life mistake you could have. So I'm at like middle, right? Learn from someone else's mistakes, and Cory's learned from someone else's success. So Cory is a guy who started off flipping lots, right?
Yeah, flipping lots. Bought my first home at 22. Started house hacking, right, in 2009, kind of when that was not really a term yet. That was really just AKA roommates. I was 22. I didn't need a 3-bedroom house. I was moving some of my buddies and let them pay for my mortgage, right? From there, yeah, started flipping lots, going to local auctions, buying vacant lots and subdivisions that kind of tanked in the crash. Was finding good deals on that, and I would purposely target the ones like between houses so that I could easily just buy that lot and go knock on the neighbor's door directly on either side and say, hey, like, you want to double your lot size, make sure nobody builds here, etc. And it was an easy sale. So I got to kind of do that, bring my buddies along and kind of show that. And that's really what fueled my passion for just real estate and what it could do, right? Continue just on that journey and have just continued to largely buy and hold, which is why I'm super excited to kind of go over that today, because that's certainly been mine and my wife's strategy over this time.
Yes, so who am I? I'll go back to this. Right, I was president of our young professionals group. I think what I probably do well is connect and teach on a national level. Had a lot of exciting opportunities. If there's someone that you need to know, I would say over the last course of the year, that's kind of my role in this national organization, is I probably know the who. Like a walking Rolodex of, oh yeah, I know that guy running that play in that place, and they would probably jump on the phone with you. So what we hope to accomplish we want to do some deals with you. We want to see you guys do deals together, right? So hopefully we get to work together, we'll advise you on some, and create a community where we all raise some wealth together. Matt told us, like, right, he's doing incredible things, and he's like, it's all started because I started coming to Grid. And where's your portfolio at right now, Matt?
I mean, total value?
Sure.
Probably around like 1.5 in really a year.
Yeah.
Love it.
And I know you're just running right now that owner financing play that we talked about back in April, right?
I actually was not able to come to the owner financing one, so I watched their quick, kind of scrolled through, did the scrub on that session that you guys had and pitched it, and they're going to take it. So the way that Justin and I did the numbers, just off the owner-fi over a 5-year period, I'll net $200K, and then, you know, be in a really good spot with that property when I'm ready to actually finance it. So,
Huge win. That's awesome.
All right. Who's ready to do a little networking? Ready to get interactive? This only works if we all work. Can we all agree? We're going to get uncomfortable for 30 seconds. Say yes.
Yes.
Yes. Awesome. You get it past Dan because you're chewing. All right. So if you have deals, if you have deal flow, so if you are a wholesaler, if you got an off-market deal, if you're an agent, if you're looking to unload some of your portfolio, stand up. Stand up. We've got some. Anybody else got some deals in the room? Any wholesalers in the room? Any shy wholesalers in the room?
Where's Jeremiah?
Okay.
I'm already looking
Jeremiah,
for
where you at?
Where are you at, dude? Where are you hiding?
Where's Jeremiah?
There
Come
he
here.
is,
There
way
you
in
go.
the back.
Oh, all the talent's hiding in the lobby. Come on in, guys. I'm about to talk about you. Come on, Sean. I see you. If you've got money, I'm knocking stuff over. We can raise our hands. Who's got cash? Who's looking to lend money? Who's a loan officer or who's got private money? Awesome. Awesome. Yes.
That's it. Yep.
Who's interested in real estate investing?
Yeah. Excellent.
Everybody?
Most
Everybody hands down?
excellent.
All right, there we go. There we go. Who's a vendor, right? Do we have any property managers in the room right now? Yes, I see a couple. I see a couple here. Fantastic. You're property manager now, Will? Oh,
Love it.
Okay.
Love it.
I see you. All right. Who's a contractor that's looking that we can call on? Brandon over here. Fantastic. Frankie. Yes. Zach. I love it. I love it. All right. Any home inspectors in the room? Peter hiding. Come on up here, Peter. There's room up here, bro. We got you. Don't be shy. We got any other vendors? We got any title companies? Got Tom in the back. Yes. If you need title to close these deals. All right, all right, all right. What category am I missing? What are you looking for that I haven't mentioned? Vendors, yes. We have any vendors? We got a stager here. Aaron Dahl, raise your hand.
Invest in staging. Do it. Stage your properties. Makes a difference.
Love it, love it, love it.
Tree service.
Excellent. Kaya.
Landscape design.
Awesome. Zach, what do you do?
Demo, junk removal, material hauling, dumpster rentals, and light landscaping.
You want Zach's card. Yo.
You do want his card. Please go get
You
that
want
card.
Zach's card. Dalton.
Media production.
Media production. Who are you, Dalton? Who are you with?
My name's Dalton from Horizon Media Group. We do all kinds of content marketing for brands. We do videography, photography for real estate, all kinds of stuff like that. If you need a photo or a video of any kind, give us a call.
Yes, Rob Matheson back, raise your hand. Rob is one of our partners, one of our sponsors. We do this together. Dalton is the mad scientist behind all this. Great. All right. Any real estate agents in here that are like working with investors? Yeah? I see a couple. Hey, Jason, can you plug your real estate group that you're doing with Chuck?
Yes, Knoxville Real Estate Investors Group. We're on Facebook, we have about 4,000 members. I was hoping to get it started back again this month, but it looks like it's gonna be July. Cool. But we're trying to get it set up to be at Cotton Eye Joe's. So as soon as I have more details, I'll put it out.
All right. And the group is it Knoxville Real Estate Investors? Knoxville Real Estate Investors Group. Yeah, Jason is a great ally. There's a couple other really good ones. Chuck Gorman runs a SoNo Investors Group. That's the first week of the month if you haven't been there. Really good, really hyper local. Get a finger on the pulse of what's happening. Meet SoNo business owners. I like that one a lot.
Yeah, that's a
and
good
our
one.
buddies Jason McDaniel, one of my old friends, and Richard Gamble run Knoxville's best real estate investor meetup. Other than the misnamed group, it's absolutely incredible. And what they do is they go really deep on some. So if you want to go deep on one topic with one speaker, that's a great one. Really good
Super
networking.
good.
Check that one out as well.
Super good.
All right.
Love it.
Fantastic.
Say the name of that last one again?
Knoxville, well, grab me afterwards and I'll get you all the info. Get you all the info. They get one mention. That's more than enough. Okay.
Legalese. That's your favorite.
Legalese, yes. So the state of Tennessee, if you are a real estate agent and I'm working with you, we sign a disclaimer statement and it says, I am not a home inspector. I am not a tax professional. I am not a real estate attorney. I'm not an appraiser. I'm not a surveyor. I'm not many of those things, really. I can advise you on negotiation and I can sell real estate and that's about it. So invest at your own advice. You can lose money investing. I just got to speak with the president of Keller Williams Realty. On Saturday, he was in a room with a few of us. He was talking to us and he said, if you're going to spend $1, you should spend 100 hours in education. If you're not willing to do that, put your money in growth index funds. You'll be just fine. You can retire off of that. So just keep that in mind, right?
I love it.
Yes.
Perfectly said. All right, let's break it down, right? What is BRRRR, right? This is an acronym that's been coming into popularity over the last couple of years, and it's a really just basic framework, which just stands for buy, rehab or renovate, rent, refinance, and then repeat. So, right? So the idea is you're going to buy a property ideally below market value. You're going to fix it up a little bit. You're going to put some tenants in there. Then you're going to call one of our friends here, like Foundation Mortgage, and you're going to go ahead and look to refinance that property to really try to draw as much of, if not all of your cash back out of that deal so that you can go repeat, redeploy your money, go do it again. So basic framework in essence of how to buy and hold. It's been given a fun acronym as of late.
Yes. Anybody BRRRR in here? I know I talked to Jan, who was here. Anybody else?
Yep.
Is it still possible, y'all? You still BRRRRing? You think it's good? I know Jen.
I love it.
Yeah. Tell me more.
My first big deal was a 12 unit I bought. I closed in epic good timing, February 27th of 2020, with a plan to evict all 12 units. Took a bit longer than that, but the property has, it's a 5-time multiple in value now. Bought another one last week, and we got another one coming next week. I wish I could do it 20 times faster.
Over and over and over again.
Yeah.
Right. Yep. I mean, that's the model. So when we talk about like just some considerations before you're getting into this, you certainly want to consider like how much free cash do you have before you're going into the strategy or finding the money, right? There's plenty of private money lenders in the room or we can connect you with. What's your overall just long-term strategy for real estate? Are you looking for like an income and something on cash flow? Or are you looking to just outpace inflation, appreciation, or all the above in there?
So who's cash flow oriented right now? Hey, if you just walked in,
Come on in.
we've got some seats. And I'm saying, because I see some of y'all that I want to call on, and it's going to be hard to talk to you back there because I want you to participate because I'm lazy. That's why I started a networking group, right? Hey, I run a mastermind and you come up with the answers. It's amazing. All right. No, who's cash flow focused right now? Right? All right, I see a couple of hands. Who's more appreciation equity focused in their portfolio right now? All of the above?
Yeah, a little bit. Yeah, absolutely.
Just learning. Who's just learning
Just
today?
figuring it out.
Fantastic. Awesome. We're all in the right place. I currently don't have any. I've got some equity stakes. I currently don't have any assets. Right. That's why Cory bought lunch today. No. So right. I've been flipping and doing cash flow things to get that stake up. I don't have any long-term holds. So I'm taking a strategy like, hey, I'm 40. Right. I'm not in my 20s. How can I accelerate that? What do I have? I got a bunch of networks, so I can do joint partnerships. Where can I add kind of intellectual equity, where I'm finding the deal, or I'm advising on how to do a deal, or structuring a deal, going in that way? That's going to take me down that syndication path, right, a joint venture path. If I'm in a cash position, I might be playing a different kind of game. Make sense, y'all? Right, cool. So just what's my long-term strategy? Which way am I going? That's probably the most important thing. Yeah.
Absolutely. Understanding just your overall tolerance for risk. Right, you just kind of hit on it right there. Of like, do you want to go down that path, or do you just want to put your money in like long-term index funds and safely retire that way? Like, that's perfectly okay as a strategy as well. You just have to do what you feel comfortable with at the end of the day.
Yeah.
On all this.
How are we on risk? Who feels like they've got a high tolerance for risk? Yeah. And who's pretty conservative? Who maybe have been burned? Who's got a low tolerance for risk? Who's looking for really super safe deals?
Good honesty. Love it.
Look around at all those people.
Look at the honesty. Keep the hands up. Love it. It's okay.
When things get a little shaky, you know who to go.
Yeah, absolutely. They're the ones.
They'll still have some cash. Yes. Good. All right. Hey, what is this is another one, right? I got into investing. I got into real estate because I want freedom. I want to have freedom, and I want to have. How's that working, Don? You have less stress?
I still have my day job, so no. I have 2 investment companies and my day job, so the stress is at an all-time high. But hopefully this year I go full-time in real estate investment.
I love it. Right? But yeah, like what's my tolerance for managing and dealing with rehabs, right? Anybody in here run rehabs like as a GC or as like a property manager who's dealing with people all the time? A couple? Frankie, yeah, I saw a couple other names. Like what is it like dealing with rehabs, contractors, tenants, buyers, and agents? Am I gonna have to go babysit the guy who's coming in at half the cost? Because, surprisingly, he had car trouble. That's why he's willing to work for so cheap, right? Or am I gonna go with there's a risk reward there of like, how much time versus opportunity cost am I trading?
Yep.
Do I want to even deal with buyers and real estate agents? Oh God, right? I was a mortgage broker in 2005. I didn't get my license until 2017 because I really didn't like a lot of realtors, even though it's in the industry. Now I love them, but I meet cool realtors.
All right. Cool people only in that. Yeah, but the big question.
Corey, this one here is what you're talking about right now.
I'm literally in that position right now too. It's like, will you be able to refinance all of your cash back out? Right? It's a well-known fact. We've watched interest rates more than double over the course of the last year. And so is that refinance going to make sense? Can I pull all of my cash back out of this? Yes, no, or how much cash can I pull out while still maybe wanting to keep my payment in a certain range because my cash flow? So I might have to leave some money in the deal. And am I okay with that? Am I okay with kind of leaving 20, 30, 40 grand in a property, knowing that I'm just going to recoup it like long-term because I'm playing the buy and hold strategy?
Anybody have some equity stuck in a property after the market changed? Yeah, I see a couple hands. Yep, Rob. Yep, right. The secret there is you got to buy right. That buying right solves all sins in this game. Right. You make all your money when you buy it.
Yep.
So where do you want to own and hold rental properties? Anybody have a niche that they target? Anybody go after a specific neighborhood or a specific location, specific town? Yeah, how about you?
My buy box is well defined.
Cool. What's your buy box? What's your buy box? I want to have a deal for you.
I have my list of zip codes.
Cool.
But not everything is necessarily in those zip codes, and then it's got to check my boxes.
Awesome. Is it geographically centralized, or are you just looking for something specific? Why are you going with the geographically centralized buy box? Why is that important?
Because I self-manage.
Yes. Right?
Yeah.
A lot easier to bop to like 4 or 5 and not, instead of like, shoot, I've got a problem and I'm running from Spring Hill out to Norris or something, right? And I'm going all over. Okay, fantastic.
Yeah, how far do you want to go? Just thinking of how long you want to keep something. Do I want to keep this for 5 years? Is this a property I'm going to hold for 10, 20? I'm going to pass on to my kids. We're never going to get rid of this thing. Some stuff to consider. How are you going to manage it? Are you going to self-manage your own stuff? Are you going to hand this over to a property manager?
Who self-manages in here? Got a couple self-managers. Who wishes they didn't self-manage? I see Sean's back there, Jesse. Look, you need to go talk to him.
Just wave that dude.
Jesse's fantastic, Sean. He's going to take care of you. Yes. Yeah. Awesome. I've been a property manager in a couple of different, in residential. I've done institutional, commercial property management. It's an interesting game. Took over a multifamily. The guy that sold it, we took over for a client, right? Because assets were all tied up and he was out of the area. Stepped in. Half of the rent roll was fake. He had poached all of his good tenants, moved it somewhere else. There was a guy selling drugs in there, which created this love triangle, which led to somebody who was hooking up with the drug dealer, right, to get free drugs, trying to burn the apartment down. Had to evict like a very sweet, family the very first month because it turned out they were already 3 months behind on their bills. So just like, do you want to be doing that or do you want someone else to be doing that? It's not for everybody.
Call Jesse.
Yeah. Right?
And I'm sitting over here smiling like, sounds like a good
And if you're going to do that, right, how can I do that with compassion? How can I do that with kindness, right? How can I do that in a way where that guy that I evicted that first month feels respected and shakes my hand at the courthouse? Because that's totally possible too. It's just a business. Like I didn't get him behind on his rent. Doesn't mean I can't meet him where he is, right? Show him some compassion, help him get on to his next way. But that's not for everybody. It's emotionally draining. Cool.
That's a tough one.
Yep.
Understand what rate of return you want out of this. Again, it's like, do I just want to outpace inflation, or am I looking for just astronomical returns and I'm not going to touch anything unless it really hits just an all-time high? And
what am I getting from my other investments, right?
Yeah.
Like now that we've got maybe those deals where the margin was getting really skinny, where people take it during the run-up, I saw people taking what'd you see, Colt? 6% caps sometimes on some of these larger deals. Yeah. 5%. But when we got high interest rates or when the bond curve is crazy, maybe I'm not doing that. I'm pulling back and I'm T-bill laddering or doing different strategies. That makes sense? It's all opportunity costs. It's not just where I put my money. I'm playing the compound game. So how am I moving my money? Great book on this, Lifestyle Investor. Lifestyle Investor by Justin. Yeah. Just the velocity of capital totally changed the way I look at this. How fast are you moving your money? That can change the entire game, when you're compounding your money pretty quickly.
Mm-hmm. That's a big one. Yeah, just what rate of appreciation are you expecting in this, right? We've had historically high 20%, 30% year over year growth over the last couple of years. Really unsustainable, right? Now, some areas are appreciating than others, so that's where some folks might choose to invest outside of their local market because real estate's either appreciating differently there. What's the historic average right now, or has it been?
The rule of thumb is 4.
4.
If you go back all the way to the 70s through every boom bust cycle, you get a 4% return year over year over year. You can draw a straight line, right? That's a pretty safe rule. Anybody disagree? I'm cool. If you got a different rule of thumb. Sound good to everybody? Cool. Does anybody know where the highest appreciation market predicted in the country is right now? Anybody seen this?
Tri-Cities.
Tri-Cities?
Yeah.
Really? What are they tracking?
Number one in the top 10 markets right now is the Tri-Cities area.
That's fantastic. Send me that. That's awesome.
Number 7 is Western North Carolina over towards Morganton.
Okay. So I saw one from NAR. That's why I asked him, because I don't know everything. And Sean's, if you don't know Sean is a great resource. He's someone I ask questions to. Yeah, Duke.
Hey, Sean. Probably North Johnson City is the hottest part. The Tri-Cities, right?
What's that?
He said North Johnson City is the hardest part of the Tri-City. Sorry to hear from behind Duke.
The Tri-City.
I think it's just right?
I don't remember. They do regions in that report.
Sure.
It just said that the Tri-Cities area was the number one.
Sure.
If you send that to me, I will send that out to everybody. That's why we got our email addresses. Is everyone cool getting an email with a recap of this and the information we're discussed? If you're not, just come grab me afterwards. Won't hurt our feelings, right? Otherwise, we're going to send you some notes. We just saw a report Posted it on my story. Sevierville, right, is the #1 growth market in the country right now. And Knoxville is in the top 12. So we're predicted to have 7% appreciation this year. So don't pay attention to the news, right? The news is not local. The news is national. The news said we're going to have a foreclosure crisis after the forbearance. We have the lowest rate of delinquencies with the strongest credit requirements. Would you agree, Colt? In history.
100%, but they don't want you to know the truth, right? Because if you gain access, then you're free. So you just do what the hell, the opposite of what they say. Like, it's very simple.
Colt has a newsletter. He's an excellent mortgage broker, but if you want his newsletter, he's got some excellent survival tips. No, I think no, Colt's a great LO. No, I think that's correct. Yeah.
Just want to throw it out there. If you are interested in investing in Tri-Cities, I've got an awesome property manager up there.
Fantastic. I love it. That's Dawn. Son, you're gonna grab her afterwards. Cool.
That's good stuff.
Let's talk about buy and hold, shall we? Who likes buy and hold as a strategy? All right. You want to know the secret? The secret is we have 11 more months because we want to talk about all the sexy stuff, and buy and hold is the long-term strategy. Maybe you turn that over into owning notes or something like that, or being the bank. But this is the bread and butter of how you get rich, is buy it right and hold, hold, hold. It's working really well for Warren Buffett, would we agree? Right? Value investing and holding in it is a really great long-term strategy if I've got sufficient reserves.
Yep.
So give us an overview of buy and hold, Cory.
Yeah, it's just that, right? This is a property that you intend to hold for longer than at least a year. You would look at any property you're going to hold 6 months to a year. This is a property that you're looking to realistically just kind of flip and turn over. So a year plus, really I look at it 5, 10 plus years. Anything I'm really trying to buy to hold, I intend to keep for a long, long time.
Now, with that, just keep in mind, we're always talking categories, so I always speak in the same language. If I say I run a buy and hold strategy, I might exit anywhere from 24 months, right, to 20 years. Mm-hmm. Maybe my buy and hold strategy is 5 years. I cashed in my chips a year ago in my buy and hold strategy because I was like, hey, I'm going to walk away. I'm rolling into another asset class, or I've got an opportunity, or I'm going to go buy into, a business, right? Just keep that in mind when we're running through this. Mm-hmm. Cool.
Absolutely. So when you're looking for areas that you want to kind of deploy this strategy, you're really looking for lower middle income area neighborhoods, nothing super low end. You want something nice, middle ground, not going to require like too much repairs. And high end properties, it's really hard just to ultimately like hit the returns that you're looking for. It's hard to hit those rents versus like what your mortgage payment is going to be on that. So right there and right around that median price point or below is going to be a really good sweet spot for you.
Anybody seen, I was at our real estate conference at the end of the month. Anybody seen, what's our new median price point? It was $360. What's our median price point? $374, right? So if you're an agent and you're playing that game, I want to be within 20% because that's where the middle of the market is if I'm trying to just help people buy and transact normally. So what I'm hearing, 374, I want to be right below that, right?
Below that.
Fantastic. Cool.
Yeah. Yep. That's a good one. When we're going into the renovation part of this, right? Don't get like too over your skis. We're not trying to look for like full gut rehab properties. Ideally, you're really looking for something that needs some surface level rehab, kitchens, bathrooms, painting your cabinets, really at a base level. You might be fixing like a roof or again, something. This is a long term. I'm going to hold this for a while. If the roof's trashed, hey, I got to replace it because I'm going to be keeping this for a while. So I'm going to protect myself from any big capital expenses. Here's
my rule of thumb if I'm renting, right? I want to fix what's broken and I want to put in something, and this is going to depend on the tenant class you're going for. Our guy, Jason McDaniel, I love him. He fully renovates everything, right? Because that's his long-term strategy. He's holding these things. But if I'm planning a shorter-term strategy, I'm renting to college students or something, I might go in and put in my builder-grade cabinet. I might just paint, right? I'm making this a place where everything's fixed. I would live in it. And it's also going to allow you to control the rent, right? The more I put in there, the more I'm going to have to do for rent. If I don't over-improve, I can hit a sweet spot when it comes to rent as well. Make sense? Because I'm not as far into it. Mm-hmm. So what's the exception, Cory?
Just if it needs like a full renovation, then go for your nicer pieces at that point. Go for the kind of stuff that's essentially bulletproof, that's going to last a long time. Go with your high end like LVP flooring. Go with your granite countertop. It's going to outlast any kind of like laminate countertop you're going to like put in there that's going to get trashed after a couple of years. At that point, if it is something like you really are having to kind of do a gut reno, make it nice.
Yeah. Anybody had to deal with the labor shortage recently, and with contractors, vendors, anybody else?
Yeah, right.
I'm already paying all that labor, so the finish cost is not that much. Does that make sense? Like I'm already sunk there, so I might as well get the higher finishes, and I can get the rent to offset that. Yes.
Dawn, were you gonna say that?
I was just saying, if your strategy is to do a furnished rental, you might want to up your finishes.
Why is that?
When you do a furnished rental, you're getting, I don't know, maybe 50% over standard rent rates, because you're paying all utilities and you're providing the furnishings, and you're attracting someone who wants they want to sleep there and have a good time.
Sure.
They don't want any maintenance issues, and they want a nice place to stay.
Yeah. You're getting in that middle ground, right? We have a class on how to invest in short-term rentals. Your avatar there is you're a hotelier, like you're running a hotel. Here I'm a landlord, right? Slightly different. I will say a couple things, right? When I go this, I don't ever do any place that I wouldn't live in. So when I moved back here, I live walking distance to Austin East. I love my neighborhood, like I would live in all the places that we work on. If you check out some of them, we do really nice places. But what I find is if I fix the things that are broken, I make it clean, I invest in landscaping, right, where it's attractive, people respect a house as much as I respect it. Doesn't have to be the highest end finishes. I don't know about you, I grew up in houses that were not brand new. We had very modest income, but the house was clean, it was nice, you came over, everything worked, right? We took care of our stuff. Yep.
Yeah. Talk about the renting part a little bit, right? So either way, you want to be the property manager or you want to employ the property manager. So let's talk about just employing the property manager. If you're going to go ahead and just hire somebody on for that task, what are we looking at here?
I'm gonna let's talk about leverage, right? Great book, Buy Back Your Time if you haven't read it. Starting to think about how do you buy back your time so you can do your most income producing activities. Jesse Houston is a great property manager. He helps us with a bunch of our stuff. Jesse, what do you think of this slide right here and here that I can't see? Anything that sounded accurate to you, sound off?
Nothing looks wrong from a general practice point of view as far as like what you typically see in the market.
Sure.
Things will change depending on who you're using. Down there at the bottom, that part about always doing credit and background checks. Always do credit checks and background checks. And yeah, except no excuses. There is no excuse.
Okay. Awesome. Yes. So, pretty basic. I think when you're thinking about property management, one, think about how you're going to scale this. Do I have a system that's going to work, right? If I have 10 rentals, because there's no point in creating a system that doesn't work with 10 rentals, right? So if I'm going to have 10 rentals, I'm probably not keeping track of everything, right, on a notebook in my pocket. Does that make sense? A yes? So let's invest in some sort of a software. Google Doc, ask someone for help, right? Have some sort of a system that's going to work. Same thing. There are some third-party services. Can't say this again. Check credit, right? Does everyone call references? Or do we get them and not call them? Yeah? Awesome. Yeah, Dan, what do you think of this? So what's your perspective? Dan's another property manager. I don't know we talked before, I don't know the details of your business, Dan. What's your portfolio look like, right?
So I'm fairly new to the game. I've had my own investment properties for 15 years, and I opened my doors at the beginning of November, but it's a
Can y'all hear Dan? Is you face that way? Can you hear Amber? Okay, cool.
It's a franchise with Key Renter, but we go in, everything looks pretty accurate on there, and talking about the criminal and background checks, we go a step further. We actually interview all the prospective tenants, and we go down and we interview prior landlords and things of that nature. When you talk about that, I can tell you horror stories of things that show up. So
Yeah. So the biggest expense in the property management game is tenant turnover, right? So we're going to talk about a couple strategies you can do to limit tenant turnover. So you want to keep your rents at or below market rates. If I'm a little below, I'm gonna have an advantage. Does that make sense? I'm gonna have the pick. Everyone loves a deal. Do y'all like a deal? Would you like to feel like you got a deal on your rent? Yes, you wanna rent to someone like you who's making rational, right? And you're gonna have your pick. It's the same as pricing homes. If I price it a little bit below market, then I have hopefully more offers so I can negotiate on terms. So basics of a good property manager, if they can't do these things when you're interviewing them, you wanna ask what their process is for all of these. So it's, hey, how are you doing marketing? What are you doing to market properties? What am I paying you for? What are you doing for credit background checks? What's your rent collection system, right? How do you handle repairs? Like, do you take care of it and do you bill me? Are you gonna like send me and I'm gonna have to like take care of that? Just getting clear up front, having just clear expectations, like what's going on. Do I need to keep some reserves with you so you can just go ahead and deal with it and you're gonna square up the accounting? Because the most important part of a property manager is giving you that monthly statement, right? That's when I had to learn, teach myself, like CAM accounting is just like, how do I square the books and give you a monthly statement and then give you a tax statement at the end of the year? Like that's really what I'm doing, and then just deal with all the fires. Because hopefully I've placed correctly so we're not dealing with tenant issues all year. So that's the other stuff. And if they're doing their job right, you're like, I don't know if I should be paying them because they placed the tenant correctly. That's the most important part of all of it.
Get a good tenant in there. Keep your rents at a reasonable rate. You're right. If not, like a little bit below.
Sure.
Get more opportunities there.
Why do you think we shouldn't accept a partial payment, Cory?
Because you'll never get the other half. You'll spend forever trying to chase that other like last little bit.
Anybody accept partial payments? Anybody had any success with it?
I've done it. It sucks.
Yeah. Did it work out okay?
No.
Okay. Anybody else accept partial payments? Ever tried it?
I did. I'll never do it again.
How'd it work, Zach?
Pretty bad. I got a tenant that's, I think she's about 750 days late.
Oh, wow.
Okay.
You still have to?
I'm trying to get high. It's in New York, so.
Yeah, fair. No. And you know why that is, right? If I'm in a place where I can't pay would y'all agree rent's like the first bill you're gonna pay? Right? So if I'm in a place where I'm unable to pay my rent, is it likely that I'm gonna magically pull out of that? So we're gonna be having that conversation about what the next steps look like. And I need to make sure I have am I putting a system in place? Am I starting the clock if I have to evict them immediately every single time? Maybe they catch up. But that way, right, when I have to do it next time, I've lost all that rent. I'm behind on rent. Now I'm out this 30 months rent. Now I've got to place someone else. Not cash flowing so well now, is it, right? Like it's not so much fun being a landlord. So it's just having that conversation, like what's the strategy? What are we going to do to get you on to the next place? Like how are we going to catch you up? But I'm going to need payment in full and start this clock.
Yeah, get it done right off the bat.
Ooh. We have a couple. How many lenders are in the room here? How many lenders do you have from Foundation Mortgage? All right, Brian's hiding back there. You got a couple. I see Henry, I see Colt. Yes.
What is everybody using to collect rent? What's the bet?
Great system. Yeah, no, thank you. Yeah, so if you're self-managing, how are you collecting rent, guys? Cash. Oh. Cash rules everything around me. Get money. Double. Man, that's how you know you're not in Florida anymore.
I know.
Nobody hit me with the.
I would say I use Avail software. That's thrown out through like Realtor.com. That's awesome. You can link that up with your bank account. Everything can be direct deposited through there. You can draft leases through there. They give you some nice templates to work off of, but then also you can go through and draft and tweak like as needed. Has worked really, really well for me. That's avail.co is the web address for that.
I use
Stessa?
Yeah, it's assets spelled backwards.
Oh, love it. Clever. Love that.
Cory, is Avail 100% free?
No, there is it's a nominal fee though. It's like well worth it.
It's essentially like a credit card fee at a restaurant.
Basically.
Sure, it's a processing fee.
Yeah.
When you scale it, it's still reasonable.
Cool.
Yeah. What was somebody else with? Nicole?
I use apartments.com. It's 100% free and it does the same stuff.
I love it. That's why we ask. Yes.
My daughter, she uses TurboTip, And it also will help them with their credit, reporting their credit.
Ooh, that's a big one.
What
I
a
love
great
you touched on
win.
that. Yeah, because that oftentimes does not get reported, like the majority of landlords do not report credit.
Yeah, and then if you use the free version, you do have to wait 5 days to get it to your account.
Right. What was that again?
Turbo tenant.
Turbo tenant, and did you hear that? What it's doing, it's reporting to that, is reporting for that tenant, so they have a trade line, right? So helping them improve their credit. Not only is that in their best interest, right? It's also in your best interest. Would you agree if you got a tenant that's got improving credit, they're likely to get better financial terms and have more money to pay your rent? Say yes?
Absolutely.
Right? It's a win-win, like taking them on that journey.
Yeah, that's pretty incredible.
When you're going around with vendors, I didn't talk about my day job, but my day job is I run a company that credit reports rent payments. So if you want to credit report your tenants, come talk to me.
All right. This is what we got, some very sharp investors in here. If we're going through and something seems off, wave it down. I'd love to hear it.
Let's talk.
I'd love to hear it.
Yeah. Let's talk some basic loan considerations.
Yep.
Most of your investment loans, you're going to be bringing in 20%, sometimes 25% equity on your purchase price. You're allowed up to 10 as an individual loans that can be financed conforming to Fannie Freddie. We can get deeper into, or you can talk to some loan officers around your DSCR loans. They'll help you kind of get outside of that, but we're just talking a basic, conventional, like an investment loan on this. They must usually be owned personally, so not something that you're gonna buy immediately as an LLC. Maybe able to quick claim that over to your LLC or something after the fact, but you have to buy it like under your personal name. Most banks then are gonna wanna see like a 6-month reserve, typically in some kind of cash to kind of support this property. When it comes in for your refinance part, 70% is a pretty good like rule of thumb when you're looking to cash out refi something on the backside.
Who likes using conventional loans when they can? Yeah? Who's using something different like a DSCR?
Trying now.
Yeah. What's a DSCR loan, Brian? Yep.
This is a commercial style loan where the rent payment essentially has to cover the debt or service the debt.
Sure. So what you hear, right? When you look at a loan's based off the 3 C's, right? Credit, capacity, collateral. So collateral is the appraised value of the house. That's what we're taking our loan to value based off of, right? We're looking at credit. It's based off of our credit, right? We all know about that. And let's look at our capacity. So that's typically looking at our income that we can document. And there's a debt to income ratio depending on your loan product that you need to meet. And depending on where you fall in there, that's going to affect your interest rate. Depending on the credit, that's going to affect your interest rate. A debt service coverage ratio loan, the cash flow of the property takes the place of that DTI. Is that correct? That's filling that capacity. Yeah.
Yeah, so 100%. So it's an underwrite on the property itself. I've got an investor in Mount Juliet. We've done a lot of deals. He has a business that grosses $2.5 million a year, but he writes off every freaking pencil that he buys. So his DTI is like 12,000, right? So it's impossible to lend on him. But he's got $1.5 million in cash. So all we need is a driver's license, a qualifying credit score, and the bank account or quarterly statement from an asset portfolio that shows 20% or more down. That's it.
Awesome.
That's it.
Awesome. So that's a whole other conversation we have, is how we educate ourselves on loan products. So we know this is a loan product, and how do I shop for that loan product where I'm getting someone that is going to be in a relationship with me. Go ahead, Ben.
What's y'all's hurdle ratio on the DSCR?
They want to be 1.0, like even. So for example,
really,
if yes, we go down to 0.75.
Wow.
So yeah.
Can you explain what a hurdle ratio is?
Like where it has to clear.
So for example, if the mortgage payment on this house was going to be $1,500, we have to order an appraisal that covers, basically it gives you a rental analysis. In this situation on this last property, the appraiser says, I think it will rent in this area for $2,000 a month. Okay, so that's the ratio. It has to at least be 0.75% of the 1,500. But at 1%, you get better pricing and better interest rate. If it's equal to or less, then you got an LLPA of about 2%.
Awesome. Brian, so I know you've got access to different products, so I love talking to more. You get educated. And what's the hurdle ratio for you guys? What have you seen?
It depends on the lender. Some will go under 1, but he's gonna nail it on the head. Like, it's all risk tolerance. So if you are under 1, it's a bigger risk for the lender.
Yep.
So you're gonna get hit with pricing. And they may require an additional 5% down or something like that. It is the cool thing about the collateral is it's situational based, it's all risk assessment.
Yep, and I personally, right, I want to know more than one lender. So I want to have access to some options and get some input, so I learn along the way. And also, right, I want to talk to lenders that are in rooms like this. I want to talk to lenders that understand investing, right? So I'm not trying to teach a lender how to do these products that are working with other investors and are playing the game themselves. Yeah. So we're glad to have you guys in here.
Refinances with DSCR at 75% LTV.
Yep, that's what we were talking about. We hit the BRRRR. Yes.
There's a pretty cool black magic with DSCR because their commercial loans are not residential. There's a really cool piece of black magic with DSCR because their commercial loans are not residential as relates to appraisal. As long as the lender is okay with the valuation source, the appraiser can take any external data that you provide them that the lender accepts. To give you a practical example, there are some lenders that'll take air DNA rental estimates, and you can hand that to the appraiser because you're not bound by all the legalities of residential loans.
Yeah, absolutely.
Also doesn't show on your credit.
Wow. It doesn't show on your credit report, so it's not affecting reporting. Yeah, Matt.
Yeah, that's what I was going to say as well, is that on the consumer side, you need to do your research and have rent, either base rent for long-term rental, know what the monthly comps are, and then know what's renting in the area so you can provide the info on behalf of like your case. So,
correct. Also,
no, JT.
I was curious, what would be the purpose of obtaining a loan if it's only 75%? Like, what would be the purpose of that investment?
Well, if you bought a house for 80 and put 40 in it, then it's worth 225.
Oh, so that would be like
75% of 225.
That'd be like the current value.
Yeah. So on both front end, right? So what's my acquisition? There's a certain LTV I'm going to go, so I'm going to have maybe talk to. We got Chris Davis on the Zoom with Approach Lending. We'll get Chris's information. I'll be in an email. He is a private money lender that we've worked with. We've got a couple other guys I've worked with as well for that gap financing, or have a partner maybe to cover that. And then the final, well, not the final R, I guess the fourth R, whatever, is in BRRRR is refinance, right? How am I exiting from that? So I have to plan ahead. Where do I need to get my LTV? So that, and what loan product am I going to use? And how much am I going to pull back out? Am I comfortable leaving some money in the deal? Does that make sense? And if you're new, it's fine. Anybody have any questions about conventional loans or why you can only do 10? Or we got really niche.
Yes, we got
lots of questions here.
Awesome.
Yeah.
So for BRRRR, is it better to do that other loan of this DSCR?
Well, so you can do your refinance on, so you can either refinance it on a conventional loan, or you can use like a DSCR loan to do the refinance on it.
It's the short answer to those, and no one loves this, it depends, right? And it's going to depend on how your income is set up. If your income's going to support, go ahead, please. Thank you, Brian.
A big one on the two differences, one can close in the LLC, conventional loans cannot.
Yes.
So
That is true too.
LLC, you want to close that way, you need to go that direction.
Yeah.
I want to cash out, you can get more money with
So-
the conventional.
Take it all the way back. This is why we start with the end in mind, right? What's my long-term strategy? What's the asset class I'm going to pursue for that long-term strategy, right? What's the vehicle that I'm going to do? Am I going to hold these in my name? Am I going to use an LLC? Am I going to use a self-directed IRA? We go through this in other classes as well. This is a lot to cover, right, guys? We have all the classes about how to estimate renovations, how to find the deal. That's why you go through step by step by step, and you can go back and watch them or call us if you have questions. Because when I'm doing all of the variables, it gets really confusing. Because it's like, it depends. When I do it step by step, it's not that confusing because I keep chunking it down, right? So I can solve for one. Some things to think about are just going to be, if you're a realtor like us, it might be very difficult or just a pain to have to produce income statements. And for the speed, I just don't want to have to go back and forth with lenders, right, Henry? Because underwriting guidelines have gotten very, 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 and they're looking at like my Venmos, and I have to go track down who I'm paying for what, right? And I may just want to use a DSCR. But yeah, I know somebody who's bought 7 properties with the same $200,000. He acquires them in a DSCR and an LLC. He BRRRRs them, right? So he fixes them up, gets the asset class back up, and he refinances back out with the DSCR. He just pays, there's a higher interest rate typically, right, with a DSCR loan?
Yeah.
Yes.
Right off.
Yep, versus, yep, and you can't take that down. If you're not, is everybody here designated as a real estate professional in their taxes? Everyone know what this is? Cool. If you've spent at least 700 hours, it's a self-declaration with the IRA. If you designate yourself as a real estate professional, that gives you access to tools like cost segregations, where you can take advanced depreciation. It's a whole other class on tax strategies. Yes?
On that note, are there any accountants here?
Ooh, great question. Do we have any accountants in the room?
I'm gonna come now.
No. Does anyone have a good accountant? What's your name?
Knows something.
Dina?
No, I'm just not a tax.
Dina? Nina? NIMA?
DIA.
Okay, Dina, yes. Do you
My
have a good-
mom, she saved me like 10 grand last year.
Awesome. So JT, anybody else got a good CPA? Duke's got a good CPA?
Edwin Lay, he was the chief financial. Was CFO, I can't remember. He worked for Lay Meat Packing Company, Lay Packing Company. What's a financial officer for a big firm called?
CFO.
Yeah, that's what he was. Lay Packing Company.
Okay, awesome. So Chris Davis just chimed in here, got a great, and when you're thinking about this, what a lot of people do, if I'm finding a smoking deal, is there a good chance it's not financeable, Jessica? Right? So it's not financeable, it's not gonna pass conventional financing because of the condition of the property, which we can talk about at another time. So I'm gonna use some sort of private money or hard money, those can be kind of interchangeable sometimes, to get the property, get it stabilized, and then I'm gonna exit out of that using a conventional strategy, right? And conventional in this case, I'd include DSCR, right? Using an institutional financing strategy.
I have one more question.
Yeah, of course.
So on this 20%, how does that work? Like if you're new to the game, do you always have to pay the 20%?
Are you asking how you acquire properties without putting 20% down?
Yes.
Awesome. That is a whole other class. It would just be using either a partner or some sort of a bridge loan. Who's got cash in here that would help fund an acquisition? Like who would fund a 20%?
Yeah, I'm here. I got 1.1 in cash, and I don't have any investment property, so come talk to me.
Awesome. So there you go. That's where you get your 20%. Okay?
Yeah.
There's other people. Anybody else in the room willing to do some gap funding? Getting creative? Okay. So Cole.
Chris, one back there.
Couple in the back there. Yeah. Who's actually? Speak up. Who's got cash? What's your name?
I'm Dan Bully, Longboard Investments. #1 car lender in Knoxville.
Awesome. Yes. Yeah. Dan, are you running that luncheon now for Chip Kagan? Awesome. So Dan runs a Knox. What's the title of it? Plug it real fast.
It's Knoxville Landlord Luncheon. So basically, we bring in speakers to just talk about various topics for buy and hold investors, bring in property managers and stuff, talk about tenant screening, all sorts of cool topics for you. So it's just basically landlord focused.
Yep. Awesome, Trevor. I saw someone else, another hand go up. What was your name?
Tony.
Tony. Awesome, Tony. And Tony, you do private money, or you're willing to do
Private
some?
money, yeah, I do Knoxville, so just still doing that.
Awesome. Glad you're here. And Chris Davis with Approach. He's got some great products. He is a good resource. If you haven't talked to him, connect with him as well. Cool. Any other questions? Ready to move on? Cool.
Let's keep it rolling. So we got a sample deal here real quick. This is just a very basic outline of how some of these numbers are going to work, right?
So is this a good rental deal, right?
Based on what you see.
Yeah, take a look at it. $250,000, 10K in work. It's going to rent for $2,450 a month. Your expenses are right. You're going to pay $1,200 a year in taxes, $1,200 a year in insurance. So you get $200 a month. And is this a good rental deal? Who says yes? Yeah, right now. What do you think, Chris? Who says no? Who says it's not a good deal? Doesn't fit their buy box? Who's ready to get? Who needs another beverage? Help yourself. We got them over there. We're not going to drink them all. It's been a long meeting. No. Who said? Why do you think it's a good rental deal?
Probably because the monthly payment on that's probably gonna be like $1,750.
Awesome. Do you ever notice? Does everyone know who Colt Messer is now? Because he's answering questions.
I'll shut up.
No.
You're great. Serious.
I didn't know they were buying.
No. It is fantastic, but this is. No. This is a basic law of networking, right?
Yeah.
Givers gain. I show up and I add value, and the law of reciprocity says I receive value in return. Right? Zig Ziglar says, I help other people get what they want, and I get everything what I want. And it's certainly been true in my career that weirdly, when I started focusing on running young professionals groups and starting nonprofits, like all of a sudden, I'm the most successful I've ever been in my entire life. I can never figure out how to make money a lot of people money for many, many years in my career. Brandon, yeah.
This is something, I don't know if it's correct or right, just learned it. I was told when it get into this, $1 a square foot is good on your rental value.
Not anymore.
Not anymore.
Pre-COVID, yes, 100%. Like you're right.
Jesse,
like those numbers are very like true, but
yeah.
If I could find out, I'd just be living in a rental.
Yeah. What would you say?
No, like.
Yes.
I say it's good because based purely on what you have, it's over a 10% cap rate.
Awesome. I love it. So some term cap rate. What the heck does that even mean? But it sounds good, right? 10% is a lot.
I'm going to say there's not enough information. What's the ARV? What's the neighborhood like?
Ooh.
let's talk. Yeah.
There we go. Thank you.
Yep. Let's talk about it.
Awesome. So let's talk about our assumptions. Thank you very much. What's your name? David. What do you do, David?
I'm a commercial real estate agent and investor.
Yes. David's a great resource. Sharp guy. Chat with him. Yes.
Is it possible that could be triple net lease? I mean, is it too rich for it to be a triple net lease? Last example.
I'm going to table that one because I think I'll lose a lot of the room, including myself. But yes, I don't know.
Potentially, this is a hypothetical.
I
scenario.
let Cory run the
This is not-
assumptions, so honestly, I have no idea. I'm here to wear orange pants and entertain you guys.
This is purely an example of I find a home for $250,000. I need to put 10 G's into it. It's going to rent for $24.50 a month, and I'm going to assume I'm going to have to put my 20% down, so it's an 80% loan to value ratio, and I'm looking at an 8% rate. This is an investment property. This isn't a primary residence now, which means I'm going to have to pay a higher interest rate. So I went with 8% in this. We're assuming you're going to go ahead and spend $1,000 a year in lost rent for any kind of like turnover, $1,000 a year in any kind of repairs. That's probably going to be higher when you're in that turnover phase between tenants. I just spent $7 turning over my one of my rentals. So basic rule of thumb here.
What we're setting aside here are all of the other things that make real estate investing really exciting, right? We're not talking about the tax benefits. We're not talking about depreciation, paying down your loan and how quickly you're doing that, right? If the property is appreciating, all we're doing here is just looking at net income, okay? Everyone makes sense? Cool.
Yep.
So here's our breakdown on our deal, right?
So for that $250,000 house, you're going to need to be coming to the table with about total $75,000 in cash, because we're going to need to cover that 20% down, any kind of repairs. Your lender's going to want to see 6 months of reserves.
So does everyone know what reserves are? Anybody not know what reserves are? Raise your hand to be brave, and I got something for you. Yes, fantastic. Come, I got some grid gear for you afterwards. Thank you, Brandon. I appreciate your honesty, right? So reserves are, I think I'm looking at my principal, interest, taxes, and insurance, PITI. They're going to want to see that I have 6 months. So let's say my PITI for easy numbers is $2,000, which is wouldn't be kind of a poor deal on this one. It would be, I need 6 months, I need $12,000. Does that make sense? So on this one, they're going to need to see 6 months of reserves. We're going to have an allocation for repairs in this one to get where we want. And we're going to have to put 20% down, because 20% down at 250 is $50,000.
Yep. Right? Yep. Plus your 10K in repairs you had to throw into there. So it kind of gets us up to about that $75,000 in cash total.
Yes.
If we're looking at here, like our monthly costs, Colt nailed it right on the head. I'm proud of myself in my little back of the napkin math for hitting this. Like $1,770 for your mortgage on that 8% interest. You're going to spend about $100 a month on taxes, $100 a month on insurance, put you at $1,970. Or your total expenses $23,640 a year if you're not using a property manager. So if you are using a property manager at an 8%, it's an extra $196. So your total $25,992 annual cost to hold that.
Everyone
piece
follow
of real estate.
that? Is Cory using auctioneer math? Or am I
Sorry,
just, no, I skipped dinner. What's that?
I was just saying Cory was doing great, sorry.
I think so too. He kills it. No.
All right, so let's get on the backside of the income. So we're getting $24.50 a month. That's $29.4 a year, minus your $2K in lost net rent and repairs for an actual income of $27,400, and a net gain when we take that difference of $3,408 a year if you're using property management. So best case scenario, with no turnover, no repairs, you're looking at a net profit of $5,760 a year, or an 8.2% return on your initial $70K invested.
Why are we using that $70K number, guys?
Cash out of pocket.
That's my cash out of pocket, and I'm calculating a cash on cash return, because the financing is irrelevant in this case, right? It doesn't really matter. We had a trailer, sorry, I couldn't think of the word, blank. We had a trailer lender come and speak to another investment group, and he said he'll run 19%, 20% sometimes on acquiring these deals because it doesn't matter, right? It's cash flowing. It's a cash flowing business for him because those are not appreciating assets. Yeah.
Yep.
So an 8.2% return. Who would take an 8.2% return? Yeah, JT.
I was gonna ask, so how do you evaluate your purchase price? Do you take future cash flows into account as well as the ARV, or would you just go significantly off what the market value is right now?
Going based off of like values now, like I don't personally factor in like appreciation. That's like all bonus stuff on like the backside. So when I'm looking at it, I want to know like what am I going to get for it? Like right now in terms of rent, what can I make it? What can I fix it up to right now over the course of the next, say, 90 days or 4 months to fix a property up? You know, we've got limited window, like our crystal ball of looking at the real estate market is only so clear, right? None of us can really forecast like 6 months, 9 months, 12 months in the future. I remember this time last year as rates were just like ratcheting up. I mean, nobody knew where they were really going to like top out. I was hearing 8%, 10%, right? No one totally knew because we're just forecasting so far into the future. So I try to keep a narrow focus.
What's your asset class you're asking about? Is this like a move-in ready, buy and hold? Are we doing a fix and flip play here?
Like if we're doing BRRRR, you know, if we're going to rehab it. So I'm just like, I'm curious, since you're only going to get 70%-ish back, how do you determine your purchase price to make sure that you aren't upside down?
I wouldn't, in that case, what you really are actually is, or to my ARV or just purchase price right up front? Because you're
purchase price right up front.
Okay, so I would need to know, I mean, you want to be 70%. The rule of thumb is
I gotta
going to
know
be
how much it's going to be worth at the end. So, right, so that in like investor math would be my 70% of my after repair value minus my cost of repairs, and that's what I want to buy it at or below.
But really, the answer to your question, I think about this is like when we're talking about BRRRR. So to go back here, all the way, where's that one, Cory? Right? Let's make sense. So I got a couple of factors I have to nail, right? I got to nail my purchase price. I got to nail my renovation cost, which is an entire other like class we need to talk about. That's where most flippers get crushed. Would y'all agree?
Oh yeah.
Like that's the most important part, right? Is like what's my renovation cost, right? Then I need to know what it's going to rent for accurately so I can cash flow it correctly. And then I can think I need to nail ARV, so I need to have comps. Any realtors in here that be willing to pull comps for anybody in here? For an investor?
Absolutely.
Oh, I see Nemo back there. Look around, right? We got some people here, young and hungry. Well, hungry. Me too, Tobias. Me too. So to go back to that, right? It's going to be am I accurately nailing my repair costs?
Yeah. That's
and
a big one.
How high am I taking the property is going to affect my ARV.
But we're going to try and match that 70%. Like we're going to try and match the 70% LTV.
I would.
The goal. I mean, certainly, because that's going to allow me to pull like
all my money back out, or at least like damn near all of it. Yeah, it
use a basic guide for repair costs, like square foot and.
Yes, in fact, actually, we talked about that last month. And I can even re-include those like 4 slides that we have of like what are those kind of 4 buckets of repair, like
renovation. There's like from your rent ready all the way to like your heavy duty full gut rehab. How much is that price per square foot average going to be in there?
Yes.
We talked about that last month. I'll make sure I'll put that in
But
like the
for the sake of everyone's here last month, But yeah, we'll get it for you. We definitely have a rule of thumb. And
I was looking at a property and I was figuring out what the repair cost.
Yeah.
And the realtor said it's gonna have foundation issues. So I was looking at repair like 50. Do you have like that's call in and get bids, or that's just walk away, especially if you're not knowing what you're doing?
For foundation?
Right, adding on, like you already priced out the repairs, right?
Sure.
Suppose you said you got a repair budget's gonna be 50 grand, but now they told you that no, it had foundation issues. They're telling you up front. Would you double up? I mean, is there a rule of thumb with foundation? I guess is what I'm asking.
No.
You don't want to like
There are no
some pros
rule
on
of
there.
thumbs that anyone's going to give you without looking at a property that I would listen to. I can give you, for the reason, I see a couple of hands here, right? The reason we're going to give you those is coming to the last class, we're going to find 4 categories. We're all going to agree on what that category is. And then based off that category, we can tag a dollar target to it. Does that make sense? So then we get into the same thing. Hey, y'all, like we're using the same language. This is going to be a full rehab. Hey, this is a simple rehab. Cool, we're all using the same language. My wholesalers here, that's a great way to categorize this stuff. You can include that slide. Does that make sense? But then in terms of, I wouldn't be scared. I wish Jesse was here at 58. No, foundation doesn't scare me because I don't use the retail companies. They charge insane amounts of money. I'm not worried about foundation. I've sold foreclosed homes. I'm like discounting. I've done about everything. I've seen 3,000, worked for a team that sold 3,000 foreclosed homes. There's nothing in a house that's not repairable. It just comes down to, do you have the right people? Do you have the money? Do you have the time, right? My advice is partner, ask other people. Like I'd rather make less money and not lose money and learn than go out on my own.
Yeah.
That's why I work on teams. Some people here love it or independent, but me, I work on teams because I hate losing money. I like to gamble. I saw a hand back there. I'll come to you.
While we're on the topic of rehab, it's a rare loan and not a lot of folks know that. I don't see a lot talk about it. There is a conventional route on a single unit, single family, to roll reno into the cost on an investment property. It's a difficult loan to be sure, but it does let you do your permanent financing up front without having to get into hard money to do the flip and then make your points and get into a permanent conversion. You can actually get it off the rip and rolling reno off of an after repair value appraisal.
What's the name of that loan I was going to ask
It's
for?
just a conventional loan.
Cool.
I mean, it is home style. Freddie Mac has choice reno. That's their name of it. Fannie Mae and Freddie Mac both have definitions for that, but it's really just a vanilla conventional loan with a reno component.
I saw the hand up here.
Now I'm trying to remember.
Foundations.
When it comes to the foundations, I'm not a foundation guy, but I've been under lots of houses and I've dropped like a couple BMWs worth of money into foundations. So I feel like I have a little bit of experience in the matter, and I have a structural engineer on speed dial. They will, if you really are concerned about the foundation, it'll be like $500 for to get an inspection and a report from a structural engineer, and that will actually give you, because some people will look at a crack in the cinder block and go, oh my god, this thing has foundation problems. Other people will just walk right by it and not even give it a second thought. So they will actually at least be able to give you the truth of what is going on, and sometimes they'll be like, yeah, it's no big deal, take care of it eventually, whereas you figured the foundation wall is about to cave in. So you'd be surprised when you get an actual structural engineer in there, what is actually important and what is not.
Who's got a good rule of, I saw a hand raised over here, Brett. So your hand raised.
Oh, yeah, and I would say if you run into that in your escrow, go back to the seller, say that price was based on no foundation issue. I got a foundation issue, here's a quote, give them the retail quote, and say, I need this reduction, give it a try before you just walk away without asking. You don't ask, you're not gonna get.
Who's got some rule of thumbs for evaluating foundation issues visually? Like, what are you looking for?
Cracks on opposite walls.
What's that, Brandon?
Cracks on opposite walls.
And who are you, Brandon? What do you do?
Final home finish. We do exactly what we say.
Okay.
Yeah.
Brandon is a GC service. Yeah.
My rule of thumb is I'm not a foundational expert. I'm gonna take the due diligence and pay someone.
Peter Howells, our home inspector. Peter, if you don't know Peter, Peter's one of our sponsors. We're gonna thank everybody here in a second. But Peter, what are you looking for visually when you're walking through a home that's a warning sign?
Big thing we're looking for is vertical cracking. If there's vertical cracking that's right through the cinder blocks, then you're looking at, you've got some issues. You want to have a structural engineer come out and evaluate it at the very least. The other thing is you're going to look for any bowing. So if it's bowing in the center or tip or from the top or in the bottom, if there is more than a 1/16 of an inch of bowing, again, we're going to look at having a structural engineer come out and take a look at it.
Where do you find a structural engineer who has time?
Excellent, excellent. I love that. I'm glad you're here. Jesse's got someone for you. In the interest and respect of everyone's time, if you have any of those questions, we're not going anywhere. We're gonna wrap this up because everyone's kind of a captive audience. Yes.
You have one thing, more so back to the rehab aspect. I'm Tom, by the way, I'm with Admiral Title here in Knoxville. Our underwriters are starting to ask for notice of completions. I'm not sure if there are any GCs in here that are familiar with the idea of a notice of completion. A lot of home builders are pretty familiar with it, but if there's any work done to the property, contractor, even self, whatever it may be, the title company is made privy to any of that work. We are going to now require notices of completion to be filed. What that is, it's a 10-day hold where any subcontractors can slap liens down on the main contractor so that title insurance can be written. Now it's the same with cash out refinances. Mainly this is for our flippers, but please make sure you contact your local title company, and I'll prefer it be Admiral. But we can actually draft and record an NOC for you all. All of our underwriters are starting to do it, so just a heads up, even with refinances now.
Awesome. I can give you. So I worked for a team down in Tampa, right, that had the contract for HUD, Fannie, Freddie, several banks in 5 counties. Tampa was the 3rd hardest hit market in the country. So I was a mortgage broker there in 2005, and got into property management. So I had a front row seat to that entire disaster, like the whole life cycle of it. When I'm walking through properties, and what we would do, even though we represented the bank, we had no disclosure. But the bank just didn't really care, right? They have no disclosure because they can't be responsible. They have no idea what Cory was doing in there before he walked away from the property, right? You don't want to know. So what I'm looking for is it's very obvious. Is the house slanted? I like looking at doors. Are the doors flush? That's a real easy indication of issues going on with the property besides all the visual stuff. And everyone know, if you don't know the difference between a vertical crack and a step crack is gonna follow the cinder blocks. Does that make sense? Along the mortar joist. Not that big of a deal, generally speaking. Remember the part where we talked about, I have it on tape, right, Dalton? About do not take this as legal advice, but it doesn't freak me out. A vertical crack right through the block is an indication of man, there's a lot of pressure going on this, right? It's cracking right through the middle of the cinder block. I have seen that happen one time when a dude drove a Bobcat into a house. We've got a house we're looking at right now, this where, I don't know, they we have foundation issues because, right, Peter, they were trying to create access for AC or something and created cracks in the block, but the house is fine. Basically, I'd call a home inspector and call a structural engineer, and Jesse's got the plug on a structural engineer before we move on.
Because I know you got to move, but 99% of the time, foundation issues comes from water, especially in East Tennessee. So if you have a rental property and you're holding on to it, make sure you check at least every couple months to make sure that the gutter extensions are still on there, nobody's kicked it off or bumped it off with a lawnmower or something like that. Make sure they're on there and getting clear of the house.
Yeah. And certainly come talk to us. There's a reason why I do this, because I could go deep on water, right? Water control, usually pretty simple. It's just grading, and then controlling the water running off the house is
solve your problems.
Basically the problem every single time. Yeah.
99% of that.
Cool. So want to take these one at a time, Cory? We'll go back and forth, popcorn style?
Just some final thoughts, right? So owning properties as rentals for your long-term, it's really just the idea to increase your cash flow and really just build your equity over a long-term basis. Again, this is just the long game in general. You want to talk about the 1% rule?
Yes. So, and someone, we had a deal that's kind of close to that. I like to buy rentals that are closer to 100 times the monthly rental rate. So the famed 1% rule, right? Which just means if I bought a place for $100,000, right? Am I going to be getting 1%, from that? Yeah.
Am I going to get $1,000 a month out of that? If you can do that, you're well on your way.
Is anybody still hitting the 1% rule in this market? I see some laughter. Yeah. Cory won't. Cory's buy box is amazing. Cory's like, I won't buy anything if it doesn't cash flow $500.
Yeah, minimum.
Cory has a time machine. He jumps in the DeLorean and he's finding deals.
They're out there. I mean, it is possible. It has gotten a lot more challenging, but there are opportunities out there, really, truly, no matter the market. So like, you can strive to hit this, but that also goes back to like just your risk tolerance, or maybe I'll take a little bit less. I'm not going to hit my 1% rule, but it's in a neighborhood that I really want to own a piece of dirt there. It's like collecting a baseball card or collecting a car. Like, I just want it because I want it. Like that's I know, two different things, but you know.
I love it.
Same
That's
thing.
why you're fine. You're like, I'm buying this because it's like I want to collect a baseball card, but that's cash flow $500. Again, we buy them right, doesn't matter.
Buy it right, doesn't matter.
No, I want to do a long-term appreciation play. This is going to be tough to do in an up market, right?
Yeah.
Because you're not going to find them as well. If you're looking for deals, anybody want a deal that's going to cash flow $500 a month? Yeah? Great. So Cory finds these. Go check it out. We recorded it. It's how to find motivated sellers. I think it's the most important class we teach. It's basically how to identify circumstance and emotion, and then how to engage in conversations with those people and problem solve. Like that's it. And then how to market for deals. Those two things, if you don't have those, we're not really an investor, right? Like if I'm doing this professionally, I've got to have deal flow, and I've got to have the ability to get them under contract.
Yeah. Come holla. They're out there.
Yes.
I promise.
Yes, Nemo.
For each of you, just like in a nutshell, what is your long-term goal? Is it equity or is it cash flow? And how are you strategizing to get to that?
Oh, that's a great question.
Great question. So for me personally,
just like say, for you, it's never one or the other. It's always both. And it is, right?
That's good.
It is. In this case, like for me, I look at it as, for me, it is a long-term game. But I am also trying to quickly retire myself out of this business to a degree, right? So I do have a goal in mind. I have a number I want to hit per month on a cash flow basis, $7,000. That's my like freedom number. If I can hit that, that offsets all our expenses, like we're square. Getting close, happy to say, but like it's just getting there, right? Because I know that for me, I want to be at home with my kids. I want to do like the stay-at-home dad thing when my kids hit like middle school. So for me, it's that point, and then from there, I can manage my properties, and that'll be essentially my job at that time, and something I can just kind of give away at the end. So it's both. Yeah, because it's both. Like I know that those properties, as I hit that number, those I can just hang on to forever, and then when it's time for us to want to retire or anything like that, I can either just sell them all out and just liquidate and really just take all the cash, or they'll likely be paid off, and then I can turn around and just like owner finance these things out and just continue making money on these properties.
So for me, I'm gonna give you a basic framework. There's a guy, check him out, Brett Tanner.
Super good,
Brett
dude.
Tanner is on social. Brett is the head of KW Wealth. If you don't know, KW has 170,000 agents. It's the largest company by agent count. Why is that relevant? It doesn't really matter here locally. But in terms of institutionally, right? Gary Keller's writing books that I see in the airport. Like there's some incredible training. So I go to those guys for resources and training because they're training such a large agent body. They've got a ton of data. They got great practices. Actually, the head of that lives over in Louisville. Maybe we'll get her to come out here. So he has just a basic framework, right? Step one is I'm a cash flow. I want to get cash flow. That's what I'm most interested in. It's going to get me to freedom as quickly as possible. And I don't need necessarily cash to get cash flow. So I can play some like a higher risk reward game. So how do I first replace my current income, right? That's just the basics. So at least like, hey, my bills are paid. Then stage two, right, is how do I double that number, right? And then the exit strategy, the long-term, like we have all won, drinks are on me, is how do I 10X my monthly expenses. So, right, so step one, I want to be neutral, right? I've got my monthly expenses covered. Step two is how do I get to double that? And step three, how do I 10X that? Because I'm going to use different strategies along the way. And that lifestyle investor book is fantastic. I'm throwing those things out to you because those are other niches, other communities you can dive into that also have great support. You know, Justin Donald's come out to talk to KW Wealth.
Yeah, that's a good one for sure.
What's important about this top one, right? You don't want to do this in reverse. We don't want to go play the fix and flick game and suddenly decide now we're going to be a landlord. Anybody else done that as an exit strategy? No? No? Wow. I see a hand back there. Thank you. That is not fun. That is not fun. And now, on rent, the market is making us look smart. The market was appreciating and making us all look like we were genius real estate investors because no matter what you bought, it went up in equity 20%, so it's hard to do a bad deal then. It was just about how much cash flow can you get and how much velocity you can get. Right now, rent is doing that for us. Wouldn't you agree, Jesse?
Sorry, say that again.
Like, I might get bailed out if I bought something because rent's so crazy. I can get, if I had something and it didn't work out, I can go rent it and I might be safe. But you want to make sure it cash flows on the front end. Right?
Yes.
If you're, and then you can fix and flip it, which Cory's talking about doing on a cash flowing asset. You have that one on Hannah that we talked about last week. Went through all the numbers. Sorry, last month.
I've heard multiple people telling me that Knoxville is like top 10 highest rented in the nation.
Have the biggest increase of anybody.
Okay, maybe that's the more correct thing because I don't see how that's possible. So maybe that's
probably to median income. So if you, before COVID, median income to afford a home in Knoxville was $50,000. Now it's $90,000. Right? Does that sound affordable? Y'all live in Knoxville. Is that do we think the median person in Knoxville is making $90K? No, right? So we've got an affordability crisis we as a community are gonna have to talk about. We've got an infrastructure crisis we're gonna all have to talk about, right? Our property taxes are wild. Hanson Sale said to me like secretly, that's our lobbyist at Economist for Car, he's like, they're too low, right? If you go see a road being paved in the city of Knoxville, bring a small child because it'll be 84 years before you see it being paved again. That's not sustainable, right? Pigs get fat, hogs get slaughtered. I don't know about y'all, but I want to just make some money and keep making some money over long periods of time. Cole's nodding yes, right?
I think cash is going to be gone in 5 to 8 years, and it's either assets or you're screwed.
Because we're going digital.
100%.
Digital.
Yeah,
Digital.
like assets are kind of that ground that's untouched.
Yes. So DM Colt for the newsletter. Yes.
I get on Facebook more than once a week after this.
No, does that make sense? So just thinking about, well, I think I got off on a tangent. Sorry, guys. But I think people should talk about that. They're talking about recoding, right? Because what we did in Hardin Valley is we built 1,200 homes. We have infrastructure for less than 500 homes. So that's going to be a nightmarish disaster. So what they want to do is how do we increase housing density? This is the conversation we're having here in Knoxville is how do we increase housing density for that missing middle and do a town center style. If you haven't seen it, we got a town center right around the corner here. Go check it out. How do we do that kind of a development in East Knoxville? Because from talking to the mayor, he was a little salty. They both went after Smith & Wesson. Knox County lost it because they didn't have any housing out there. Where they would have put the factory, the CEO did not want to drive an hour. He'd rather be in Maryville where it would be a much shorter commute from where he was going to live to the factory. And this is the stuff I want to be educated on because these are investment opportunities if I know where the ball is going. So cool.
Yeah, that's a big one.
All right.
I will say these numbers essentially will work the same across the board. So whether you're doing single family home or you're looking at multifamily, smaller multifamily, all the way up to like larger scale apartments. In fact, oftentimes actually those commercial loans like that can oftentimes even be a lot easier to attain. So don't think it gets harder as you scale. In fact, quite oftentimes when you're doing some larger properties, the financing part of it can oftentimes be easier than if you're looking at somebody's like single family homes. But that is a whole different topic of discussion whatsoever. That's in a couple months when we start hitting commercial, right?
Hey, awesome. Aaron, if you're a sponsor, can you make your way up here while we're wrapping up? I'd appreciate it.
We got ours.
Thank you. So, Will, where is that? Can you grab that thing? Thank you so much. All right, real fast. Jade, can you come up here?
Come here.
All right. So, if you've been coming here, and we've got some giveaways to wrap up, we've got some things to give away. Where's all our swag? Megan,
here.
Fantastic. Who likes winning stuff? Yeah? Okay, no? Not much of a response.
Yeah, we do.
Hell yeah, we do.
Who likes winning cash? Okay. There we go. We're gonna give away a little cash. Maybe a t-shirt, don't be too disappointed. Might be something else. Okay, all right. So, really wanna thank you to our sponsors, right? And wanna thank you to our sponsors. Aaron, you wanna come up here? Peter? Awesome. These are people, the reason why we're in a relationship with them is because they're people that you want to be in a relationship with. They're people that you have long-term relationships with. that can open doors for you.
Thanks, man.
Oh, I love
You're
it.
so sweet. Thanks, dude.
Will Cochran.
No, you're sweet. This is not for me. This is not, please. Oh my God.
Yes.
This is not, yeah.
Yes.
No, this is not.
Yes.
You're such a smart. Thanks, Will.
We used to work with Will. We got to train
you, Will.
Will as an ISA. Will is one of my favorite
Killing
people.
it.
Yes.
Killing it.
If you don't know Will Cochran, you should. Want to thank all of our sponsors. Peter, who are you and what do you do?
Peter Howes, I'm with Home Team Inspection Service. Obviously, we do home inspections. We're your one-stop shop, all your ancillary services as well. We are a national sponsor with Keller Williams as well, so give us a call, find us on the web.
Love it. Tom. Hey, Tom Burnett, Admiral Title. I consider Cory and Justin some of my good friends. We work together very closely, personally as well. Happy to be here. Really happy to see this awesome turnout grid. Thank you, Foundation, for the hospitality. It's great. Super awesome.
Aaron Hall, Knoxville Staging. Stage houses do staging consultations, whatever you need, Airbnbs, things like that.
Invest in staging. It's worth it. I promise you that. I promise you that.
Who stages here? Anybody else stage on their flips? No?
Absolutely.
No? Why? Just curious, like.
Emotional.
Yeah.
Nailed it.
Right? Who's gonna pay the most? Man, I wanna take my property to the top of the market. I wanna get somebody who is shopping on a monthly payment basis, right? Who knows they're not gonna have the cash to put this in after the fact, but is willing to finance it over 30 years. And I want them to have an emotional response. Also, when I stage my flips, the husband or whoever it could be the wife, doesn't matter. It could be, the husband and the husband, doesn't matter. Whoever is the critic in that partnership is not picking apart the baseboards. Because it's not an empty home, right?
Can I ask you a question? How much does it cost to stage, like per square foot, for example? The 2,000 square feet house.
It depends on what we're doing.
Well, give me an average.
That's a great question, and I will not be because if it was me, I'd say, I'm happy to discuss pricing after I discuss my value proposition.
But what I will tell you is that we personally do not bill you until closing.
Yes.
And so that I know is a helpful thing. I am a realtor. I don't do much with real estate, but I do understand that if you as the agent are paying, or you're trying to convince your seller that staging is something they should do, you've already told them they have to fix the toilet, they have to fix this, they have to do that. You're coming to them with one more price. If you can tell them, well, you're getting 15 grand at closing, this bill won't be till closing, it may help. So that's why we do it that way. So staging, it can be $1,500, it can be $3,000, it depends on the house.
We use Erin, she's very reasonable. And for the sake of everyone who's not specifically interested in staging, grab her right afterwards because I want to be respectful of everyone's time. Megan and Nick, you want to come over here?
Yeah. Well,
awesome. Do it from there. Fantastic.
Hey everybody, I'm Nick Galbraith. I'm the founder and president of Foundation Mortgage, and we're super excited to have this group here in our office, which I think we about hit capacity. If it keeps growing, we're gonna have to rethink this. We'll make it work though. So, and of course, we're a mortgage broker. We're a lender. So a lot of the strategies here we can help with, but not everything. And if we can't do it, we're gonna have connections with people in the community that are also lenders that can help with these strategies too, because we don't do everything. So, we're all about the promotion of the community, really an abundance mindset, and really excited to have this crew and this group, in our office.
Yes, thank you.
Awesome.
Yes. And so, after we do this, if anybody's interested, I got a sweet. Anybody want a seller finance deal? Yeah? Yeah. Great. Fantastic. Great. So Chris Davis couldn't be here out of an abundance of caution. His spouse was sick, so he's at home manning Zoom. Hi, Chris. But he's got a great seller finance deal he sent me details on. We can share with everybody because there's going to be an open house next weekend for it. It should sell that weekend. So excellent. Okay, cool.
We'll make sure we'll share that in the follow-up email.
Time to give away some things? Yes? All right, let's get ready to rumble. Cool. Who has, If you could stand up, this will make it easy. We'll make this very quick. Who's been to grid before? Who's been to grid before? All right. Well, you don't have to stand up, but it would make it a lot easier. Keep your hands raised. Keep your hands raised.
Keep your hands
all right?
up. Yeah,
all right.
keep your hands up, you better.
Who's been to 2 grids? Who's been to 3, 4, 5, 6, 7, 8, 9? We've been going for 2 years. So who's been?
I've been here since 21, I think.
Definitely.
Awesome. 10. What do you think, William? Is it you or Don?
You or
Don's
Don.
your client, so you kind of lose automatically. Sorry.
Yeah.
Sorry. Awesome. Don, we got a copy. This is the Bible, right, on how to BRRRR. Get yourself a copy. We'll include the link in the email, right? It's a copy of how to BRRRR for you. Thank you for coming out here, Don.
Thank you.
And we got a t-shirt for you as well. Okay. The lovely Jade, do you want to do a drawing? Sure. So this drawing, you got some tickets when you first came in. You got your tickets out? This is for all of our newbies, all of our first-time grid people. Jade, what's that number?
5007647.
What are the last 3?
647.
647. Welcome. We're gonna give them book in a book. Ben, we got a book for you, and I got a t-shirt for you, so let us know your size. Just grab this right. Large? Okay, got a large t-shirt for you. All right, Megan, for everyone that's been coming, this is...
All right, the last 4 are 7608.
7608.
7608.
What? That you? You win?
Jesse's got a copy of... Jesse's got a copy for How to BRRRR for the first person to send him a deal. Yeah, man. We got you. And a swag as well. Jade, what do you got?
All right. Last 4 is 7520.
7520. All right. I love it. Gracious in the front. Thank you. What's your shirt size? Large. Jesse, you a large? Yeah. All right. You a large t-shirt? We got it. Yeah. We got it. Excellent. Cash? They're gonna let me get out of here without giving us some cash? We got some t-shirts as well. Want $100? All right. You give us away, Cory. Go for it. Who brought somebody here with them tonight? All right. Fantastic.
Who drove the furthest?
Yeah. So who drove the furthest tonight to be here? How far did you drive? Morristown. Fantastic.
Greenville.
What's that? Greenville. Whose geography which is farther away? Greenville. Anybody drive further than Greenville?
Colorado.
My brother-in-law from Italy.
Fantastic. Who drove within this week? Did you come from Italy this week?
Yes.
All right, come on down. Okay. I know one Italian tongue twister. Sopra la panca la capra canta, sotto la panca la capra crepa. Very nice to meet you, Antonio.
you. My pleasure.
Pleasure. I spent a summer working on farms and vineyards.
Let's congrats Jade and
Yes.
wrap it up.
Cool. Jade, you want to come up here? We've got where we can see you on camera for posterity. Jade.
Okay.
Jade has been with us. Yeah, these are for you. Sorry, Will. You tried. It's safe.
Thanks, man.
I was very confused. She was like, "What is going on right now?" So we started a couple years ago. We started Grid June 1st of 2021, right? It was a Tuesday.
Correct.
And then we launched Keller Williams Young Professional on June 3rd of 2021. So we did both of those that same year, right? And Jade was with us. We started before. She's been working with us since she was new in various capacities. And just this week, Jade joined Casa Knoxville. So what we did is Rob Chavez, if we can go back, yeah, right there, founded Grid. 14 years ago. He was just here. He'll be back here in October. An incredible educator on wealth. Really great guy. Like he's the guy that taught me all this, which is like, just be friends with people. That's why we vibe, right? That's his whole business plan. And he's running a massive, massive business, is just be friends with people and add value. So we just launched Casa Knoxville. What does that mean? It means we have access to a ton of deal flow right now. Cory and I think, are sitting on 19 off-market listings, right? Because we're working with institutional investors. If you've got any short-term rentals, I got a pipeline right now of short-term rental buyers. We've got a lot of resources we can help you out just to service the landlord, and we're going very deep. So we partnered with Expansion, and we just want to congratulate Jade, because Jade is our first hire at Casa Knoxville. She's formally part of the team. Thank you. So, thank you all for coming out here. Take a look around. We'll be here to answer any questions. Thank you very much to Megan. I want to specifically call her out. If you don't know, Megan Galbraith, right? Megan speaks about social media, right? And she has been so instrumental. Like, we moved here simply because we needed a greater space. Like, liked you, wasn't realizing this should work. Awesome, we all get along. Let's see how this works. And Megan has, how many of you were invited here because of Megan tonight? Right? I see a ton of people on the Facebook group, like 75 people have joined because of Megan. The larger this community is, the more deals we get, the more flow that happens. So if you've got any deals, we've got, and we're consistent now, we got some scale with Casa to start getting this out. We're gonna be sending out some deal flow for you, right? Some off-market deals. Cory, if you go in your email, there is an email from Chris Davis with an off-market deal right now, if anybody wants an off-market deal.
Sure.
So take a look around, find out who you're gonna meet, right? Thank you very much. If you're interested in this off-market deal, we're gonna present this right now. It's gonna be on the recording so you can check it out, and we'll put it in the email for you, Chris. How does that sound? Awesome, great. Thank you so much for coming out. We appreciate you.